Everyone, and welcome back to my channel. I decided to do a little recording on analysis, the same candlestick analysis I use in trading synthetic indices, trade forex. I also said to you we can use it to trade metals, and this is gold. Now let's quickly do that analysis. Very simple. You can see this is my entry here. This is my entry, the same 2-minute entry on gold. This is a target. This is risk to reward 1 to 15, really. But we have, at this point, we have actually made 1 to 10. I'm going to show that to you. So, but let's do our analysis just like the way we do it on synthetic. Now, we going to monthly. I'll go to monthly first. Okay, so this is our 1 month. So let's check our 1 month chart and see what we're looking for. Okay. And right now we are using trading view. So we're using trading view here. Okay. So we zoom to see where we are. So we're on it. So if I had analyzed this chart to trade for last month, I might have also given you a signal that this month trade, this was last month, the whole of this month is going to be a buy. Now, why is it going to be a buy? Many people are going to, because they don't understand candlestick, they are going to be looking at all of these rejections here. Let me show them to you. All of these rejections here, all of these rejections, and be thinking that when this candle closes, they will go a sell. Now, that's a problem, because the traditional way of trading, what this candle means is that this area is seller's entry. But what you don't understand is that the rejection is showing buyer's pressure. It's buyer's pressure. My student will understand that. So it's buyer's pressure. And also, when the candle closes in a month, a monthly candle closes, it closes very, very strong. It closes very, very strong. And so therefore, there is no doubt we are going to be looking for opportunity to sell. We'll be looking for opportunity to buy. So in a monthly trade, we can see new highs, new highs, new highs, new highs. There's a lot of little sign here, but we created a new high. So this month is buying. But one other thing that I want to bring your attention to is because we do not have a new area where we are going to. We don't know where the market is going. So we are in the middle of nowhere. So therefore, we need to be very careful. If there was a level here, or if there's a level here, we know the market is moving towards a level. But in gold is creating new levels. So we must be very, very careful, because in our analysis, remember we said where the market is coming from, where the market is now, and where the market is going. So for gold, we don't know where the market is going. So we must be careful. So this is our monthly chart. So we go to our weekly chart now and confirm that. So on our weekly chart, beautiful one, beautiful and beautiful and beautiful on our weekly chart. So let's make it bolder. Okay, so you see on our weekly chart, what do you see? New high here, new high here, new high here, new high here, new high, as at last week. So this week we're also expecting the market to go up, but make sure that you remember the fact that we don't have a level at the top, so we don't know where the gold is going. So we must be very, very careful. If we have a level, we now know the gold is moving towards a level, but gold is creating new levels. So our weekly, monthly is up, weekly is up. So now let's go to daily that we trade. So now we are moving to daily. So on our daily chart now, beautiful chart we have on a daily. Okay, now many of my students, when they were learning from me with binary trading, they will understand that this is a pullback. This is actually what I call pullback 2. Pullback 2. So after this pullback 2, it means this was last week Friday, this green candle. So at this pullback 2, we take a trade from here to nowhere. We don't know where the gold is going. Remember, I'm saying that, but this is a pullback 2, meaning that today's candle is going to be a buy. And let's now go to our entry. So before we get into entry, we first of all look for our point of interest on 1 hour. So this is our 1 hour candle. This is our 1 hour candle. Make it bigger for you to see. It's our 1 hour candlesticks. Okay, it's a 1 hour candlestick. So this is how it looks like. So we are paying attention to the market coming to this area where we can have our double bottom. Okay, so we have it here. We have already marked that. So let's go to our entry. Our entry is actually 2 minutes. So this is our 2 minutes, and let's see where we got into the market. So notice something here. First and foremost, we have this area. This is our area of interest. So we already marked this blue area. So we are looking for opportunity in the future, how we can get into the trade. Now, the first candle that touched it, look at the first candle that touched it. The first candle that touched it was this candle. But the market was coming down, it touched it, it made a new low. Okay, so we don't take this because after the close of this candle, we don't take a trade here. If I had taken a trade here, there is no how I would have taken a trade because it made a new low to the previous candle. This is the previous candle, it made a new low. Okay, so I wouldn't have taken a trade, and I would not want to take a trade here even though it made a new high, because the pressure of the seller here is very, very strong. So if I'm taking a trade, if I've taken a trade here, this candle here, I will have put my stop loss here, but because I know it is gold, I'll prefer to put my stop loss below this area. So I could have entered from here, but because of this strength of sellers, I was very, very cautious. So I waited for opportunity. So what did it do? The market went up and it came down. So after it came down, it gave me this entry. So this is my entry, this is my stop loss. Okay, this is the entry, this is the stop loss. You see how much and what are we risking? We are risking very small. Let's check what we are risking. Okay, from here, oh, sorry about that. Let's just leave this. So this is what we're risking. We check what we're risking from our good. So let's see. So we have entered this trade. So let's see how far we've gone. Let's put it on 15 minutes so that we can see our movement. Okay, so on 15 minutes, you see our movement. Let's check what we risked. So this is it here. This is it. Our risk to reward. Our risk to reward is 15. What we normally do is 1 to 10 when we are trading Forex. But because it's gold, we are targeting 1 to 15. When it comes to, I actually suggest 1 to 10. So if you've done 1 to 10, we have actually hit our 1 to 10. But what we put it here is 1 to 15. And I think that is not bad. And what else again do I want to show you? I'm trying to show you something here. Okay, so you can see what we are saying. The same thing we apply with candlesticks, we do it everywhere. We do it everywhere. So this is our analysis for gold, and this is our trade for gold for today. You know, this is very early. It's just the London opening. I'm not even sure London has opened, but because with candlestick, we don't do London open, New York section, we do close of candle when the candle closes. And so the candle has closed, so we have entered the market early, so we already have a profit before anybody comes in to be trading London opening, because in London opening, there might be a pullback before the market continues to go up. So thank you very much, everyone. I would like you to subscribe to this channel, share our video, like, and make your comment. Thank you. We send you more. God bless you.